The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. And joining us now here at the agmarket.net Farming for Profit Not Price Conference in Nashville, Tennessee. Pleased to catch up with Dan Basse, president of AgResource Company. Dan, it's good to see you again. How are you?
It's really good to be back with you, Jesse. Lots to talk about, but it's been a good winter so far. A little too cold for me in January, but we'll warm up here and down in Nashville. We'll reach 70 degrees today.
I know. Beautiful weather down here in the Mid-South for sure. And I even saw someone make a post somewhere in Illinois. They were putting some soybeans in the ground to test out 3 acres.
I saw the same thing. Yeah.
I mean, the way this weather has been, who knows, what we could see for sure. Well, there's a lot to talk about weather in South America. We'll get to that in a minute. I better start with tariffs, though. That's kind of the talk of the convention here so far. And really, we've long seen the rumors. We expected these to happen. Saturday, they came to fruition on Canada, Mexico, and China. And I know you just talked with folks here at the conference about this. So just 1,000-foot view this for us. What are we looking at with these tariffs and market concerns here?
Well, first of all, trade wars are never bullish for commodities. I think that's the first thing we need to say, is that as we get into trade wars, they never help the demand, particularly the export demand of the country that's putting on the tariffs. That being said, the other thing I would tell everyone is once you put on tariffs, they're very difficult to remove. Historically, I can look all the way back to the 1820s. Once a country puts on a tariff, they like the income coming in, people adjust to it, politicians get used to it. It takes a calamity, Jesse, to get tariffs to come off. So again, not bullish, hard to come off. The third problem I have, though, is the timing of this. Why would they want to put tariffs on right as we farmers get into revenue insurance? February starts the revenue insurance countdown for all of us deciding what our policies will be. So the timing of this couldn't be worse. I wish they would have done revenue insurance calculations in January, not February, but we'll probably see the markets down tonight in Chicago, would be my guess. And then we'll kind of see what the retaliation is from Mexico and China in particular to see where we go.
That's a great point you made about the crop insurance side of this. And it's one I did not think about. There's so many layers to all of this, Dan. When you really peel it back and you look at, I know there's concerns on fertilizer from Canada, a lot of different products, corn to Mexico, for instance. Then there's the China component, which we can get into more in a minute. But I just have to think that, to your point, no one wins in a trade war here. And the recent rally we've seen in grains, I have to think that it's going to be impacted in many ways.
Well, we've got a market that's relatively long. 365,000 is our calculation as of Friday. Open interest is at a record at corn, over 2 million. So there's going to be a lot of volatility. That I can guarantee you. There are some winners, if I could, which not everything is a loser. But the U.S. is the world's largest oat importer. So there's a winner for American oat farmers, and there's another winner which is called soybean oil. As we don't bring in 2.4 million tons of Canadian canola oil into this country, we will need more soybean oil, and the Chinese tariffs also prevent or somewhat cause a lower economic value for UCO coming in from China. So maybe the oil market helps out because of renewable diesel or biodiesel, but those are small winners in a landscape or a sea of rather big losers, unfortunately.
I got to ask you about China. You made some interesting points to the audience here at the conference about the impacts on China here, 10% tariffs. But another point you made as well is this talk about their preferred trade status here. So, I mean, when you look at this from a U.S.-China standpoint, where are we at and how can this unfold moving forward?
So we talked a lot about the conference about a duopoly, which means that for many, many years, the United States was at the center of capitalism. That's now changing, where BRIC nations have a GDP combined rate bigger than we at G7. With that in mind, the Chinese and the United States politically and economically are moving apart. Competition is a term that comes to my mind between the two countries. And we see that very evident in terms of high-end chips. Last week, we had, the AI system coming out of China, deep seek, if you will, trying to understand what was going to happen there, and that the Chinese are showing us, hey, we can do this AI thing without the chips going forward. So competition is there. And with that in mind, the Chinese are going to be increasingly looking at securing their key commodities, particularly on food, from others outside the United States. Look for Brazil to do relatively well with China going forward, especially after these tariffs. And China has most favored trading nation from the United States for decades. We go all the way back to 1995, 96 when they were granted it. If we remove that, and that is the plan of both the House and the Senate, that will take Chinese tariffs up to 35%. And I believe the U.S. tariff that Trump just put on would be on top of that, putting Chinese goods at 45% tariffs, which is going to hurt whether you're looking at some of the products we import from the United States. But from China's perspective, they will push goods and commodity demand elsewhere.
I was just going to say, I mean, you think of the potential of an almost 50% tariff. I can't imagine that even if the Chinese like the quality of our soybeans, for instance, can't imagine they're going to be coming to the U.S. for soybeans.
No, they did like the quality of our soybeans recently, of course, very dry. The Chinese know that these beans can stay in their reserve for probably 5 years without a problem, storage problem. So that's why they were buying our soybeans up until this point. But after the news on the weekend, there's still 3 to 3.5 million tons of U.S. soybeans that could get canceled, that are on the books, not shipped. So we'll watch this very carefully. But I just believe the Chinese will be taking cheaper Brazilian beans for the foreseeable future.
Dan Basse with AgResource Company joining us here today. Let's shift to South America, get an update what you're hearing from Brazil, Argentina, a couple different weather stories in the two countries, with the dryness in Argentina into southern Brazil, and then really wet in central to northern Brazil. So what's the latest you're gathering from South America?
So I have a team on the ground, most of my staff for that matter, along with Bank of Brazil. We're running up and down. We've done the northern half of Brazil last week, Jesse, and we're finding very strong yields. In most cases, record large. And so, Brazilians talk about bags of beans. It's a strange nomenclature down there. They think bushels are strange. We think bags are strange, but a bag equals about a bag per hectare, if you will. 2.47 is about the same as a bushel per acre in the United States. They're finding bags per hectare somewhere in the vicinity of 83 to 88. So these are like 88 bushel, 85 bushel beans in the United States, something we've not seen before in Goiás and Mato Grosso. Very strong yield potential. There are some problems in Rio Grande do Sul. There'll be some problems in Argentina, but the weather forecasts have a lot of rain for the heart of the pampas of Argentina this week. So I'm hoping there'll be some stabilization in the Argentinian crop.
Any concern if the rains in central Brazil don't necessarily shut off here? I mean, could we see transportation problems develop or quality issues or anything like that if we see continued rains? And then I think about maybe some delays to safrinha corn planting as well.
Yeah, the math on safrinha corn planting is you need to have it in the ground by the 5th of March.
Okay.
And we'd like to have 85% of the winter Brazilian corn crop safrinha planted by the 5th of March. If that doesn't happen, then there's yield drag, less plantings, and some problems. Today, it all depends on Mother Nature, Jesse, in terms of where we're at. The forecast looks better for dryness after a couple of rainy days this week. We'll see how that all comes down. The farmers there are optimistic. And remember, they defoliate. It isn't like beans just die. They'll kill them and then, of course, move behind them and harvest and plant corn very quickly right after the combine.
Final thoughts for folks, Dan, just managing their risk amid all this volatility that's out there. What would you leave folks with? Listen,
understand margin. We have what we believe is be a marketing program. Well, my mindset for marketing is sell and defend.
Yeah.
So sell when you can see margin, make some money, get the 40 or 50% sold on new crop, get the old crop out of the way at these prices and basis levels, and then defend it with a call option as we get into a U.S. or Northern Hemisphere growing season. It seems to be the right way to get this year so that we can assure the bankers we've got something sold on a margin that we feel good about going longer term. If we have good weather in Brazil and the United States, I can see corn back at 350 or 375 next harvest in the United States, and beans back down to 9.5, unfortunately. Somehow the markets need to shut down Brazil, and it would take those prices to slow their planning next year.
A lot of things for us to keep an eye on, and I'm sure we will be talking to you and catching up on things again real soon. Dan Basse with AgResource Company. Good to see you, Dan. Thanks for joining us.
Great to be with you, Jesse. Good luck, everybody.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.